Welcome, curious minds, to another deep dive. Today, we're plunging into a really compelling analysis of Australia's current economic state. Now, this is a nation many of us probably see as, robust, resource-rich, stable, but the report we've got paints a strikingly different picture, suggesting Australia might be teetering on the edge of a pretty significant crisis. Our mission today is really to pull out the most vital insights from this detailed analysis. We'll explore how an economy that seemed to thrive on commodity exports, immigration, and a frankly booming real estate market is now facing what the source calls a convergence of structural and cyclical crises. It's a fascinating look at how prosperity, or maybe unchecked prosperity, can sow the seeds of future problems.
Exactly. And what really stands out in this assessment, I think, is that it's not about one single thing going wrong. It's a complex interplay, a web of issues that have compounded over time. We'll unpack how these drivers of growth, which looked positive, have actually created some deep-seated vulnerabilities. This deep dive should help us understand the core reasons for Australia's precarious position and, importantly, what it might signify for other developed economies today.
Okay, let's start where the report starts with what seems like the foundational tremor, the housing market. Our analysis calls it a bubble-driven growth model and one of the most overvalued globally. For years, housing wasn't just part of Australia's economy, it was, well, practically its engine, right? Underpinning GDP, tax revenue, household wealth.
Right. And the crucial question then becomes, what happens when that main engine starts to, seize up? As the source explains, once interest rates started climbing post-2022 fighting that global inflation, Australia's very leveraged housing market began to unravel pretty quickly.
And the immediate fallout is stark. The report says over half of recent home buyers are dealing with significant mortgage stress after those rate hikes. Plus, median rents in big cities shot up more than 25% since 2021. That's pushing many into a real cost of living emergency. We've also seen major builders like Porter Davis and ProBuild collapse. That means job losses too.
Yeah, and this isn't just about individual families struggling, as tough as that is. It's systemic. It's a risk to the whole system. When you get a construction bust and widespread mortgage stress, that ripples right through the economy. It hits consumer confidence, it threatens financial stability, it shows how local pain can become a national headache fast.
Okay, so moving from housing, the report points to another big issue: stagnant wages and productivity decline. Real wages for Australians barely moved in the last decade, even while living costs have just soared.
And the data there is quite telling. Productivity growth averaged just 1.1% annually over the past decade. The report notes that's well below OECD peers, which signals deeper structural problems in the workforce, problems that could hurt them long term.
And the analysis suggests this is down to a mismatch between skills and what the market needs, and maybe an over-reliance on lower-skilled migration, which the source argues kind of reduces the push to upskill local workers.
It really makes you think, doesn't it? How can any nation keep its competitive edge if its workforce isn't evolving? Or if its output per hour isn't growing steadily? This isn't just about paychecks. It directly impacts the country's long-term prosperity, its ability to innovate.
Right, and maybe unsurprisingly, with housing costs way up and wages flat, Australians leaned on debt heavily. The report highlights this alarming fact. Australia has one of the highest household debt-to-GDP ratios globally, their debt-to-income ratio, over 190%.
And a critical insight here is the huge vulnerability this creates. Australian households are disproportionately exposed to variable rate mortgages. We're talking mortgages where the payments can jump. And the analysis shows that for many, monthly repayments basically doubled in under 18 months as the RBA, their central bank, hiked rates aggressively.
Wow, doubled. So what's the fallout from that for the wider economy? Consumer spending, which is, what, 60% of their GDP, it shrunk noticeably. This huge interest burden means less money to spend, which directly hurts small businesses, retail.
Exactly. It's a classic consumption crunch playing out right there. When households have to funnel more and more income just to service debt, there's simply less left over for goods and services. And that inevitably leads to a broader economic slowdown. Makes it harder to grow your way out of the problem.
Okay, let's zoom out now to the global picture. Our sources say Australia's long-standing reliance on China as its main trade partner is backfiring.
Yeah.
We're talking over 35% of Australia's exports, key stuff like iron ore, coal, lithium, heading to China.
And the key implication there is pretty clear. China's recent property sector issues and infrastructure slowdown, well, that's drastically cut demand for those raw materials. It's directly hammering Australia's export income. It really shows the risks, doesn't it, of being so heavily dependent on just one customer however big.
And it's not just pure economics either. The report mentions growing geopolitical headwinds. Tensions over things like the IUQ Security Pact, Taiwan, the Five Eyes intelligence sharing. It's straining the China-Australia relationship. We've seen tariff threats, limits on tourism and students, all adding to the economic fragility.
Hmm. It forces you to ask that important question about economic resilience in, well, a pretty complex world right now. Diversification isn't just some business buzzword. The report suggests it's become almost a national security issue for trade.
No, here's something I found surprising in the analysis. Australia added, get this, over 700,000 people in 2023-24, mostly international students and temporary workers, but the source calls it an immigration shock without planning.
Yeah, what's striking about that huge influx, even though immigration can be great for an economy, is the report's point that there was no commensurate increase in housing, infrastructure, or healthcare capacity. The foundations weren't scaled up.
So the result, worsening housing shortages, even bigger rent spikes, and just more pressure on cities like Sydney and Melbourne, which were already feeling it, a very real impact on daily life.
Right. And it prompts that critical question: how do you manage rapid population growth effectively? Without the proper planning, the investment in essentials, housing, transport services, those potential economic benefits can just get swamped by social and economic strain.
Okay, next up, energy and manufacturing problems. Despite being a major energy exporter, the source argues Australia lacks a solid domestic plan for the energy transition, and that's led to persistently high energy prices at home.
Indeed. The report flags aging coal plants, grid reliability issues, a slow rollout of green energy. It all adds up. It's created this environment of energy insecurity and driven up utility bills for everyone, people, and businesses, which is pretty significant for a developed country with so many natural resources, you'd think.
And here's where it gets really interesting. Those high energy costs. They've apparently driven a lot of manufacturing offshore. So now Australia imports many essential goods, making it really vulnerable to global supply chain shocks. The report uses the term deindustrialization. Pretty strong word.
Yeah, and when a country hollows out its manufacturing base like that, becomes so reliant on global supply chains, the report shows it just massively increases its vulnerability to external shocks. Could be geopolitics, could be another pandemic, could be natural disasters. It highlights a big structural weakness.
The source doesn't shy away from pointing fingers either, talking about government mismanagement and fiscal overreach. Those COVID-era stimulus programs like JobKeeper are mentioned as fueling inflation, asset bubbles, even some fraud cases.
Yeah, and a key takeaway seems to be this critique about a lack of reform. The report really highlights how crucial tax reforms, things like negative gearing, where property investors can write off losses against other income, which encourages speculation, and capital gains tax rules have just been kicked down the road again and again. And the analysis suggests this has made inequality worse and fueled that property speculation.
Right. And it also mentions superannuation policies, retirement savings, saying they've sort of accidentally pushed too much money into just buying assets, especially property, rather than into, productive investment that grows the economy.
It makes you wonder, how does that kind of long-term policy inertia, that delay, contribute to these structural weaknesses? The report seems to strongly imply that just putting Band-Aids on things or putting off the hard decisions only makes the problems worse over time, deeper, harder to fix.
Okay, finally, let's connect all these internal issues to the bigger global picture. The report calls it global headwinds and policy paralysis. So, external shocks like global inflation sticking around, the war in Ukraine, Middle East tensions, they've all pushed up costs for Australia. Fuel, fertilizer, food imports.
And on top of that, you have the rising U.S. dollar and higher global bond yields. That's directly forced Australian borrowing costs up for the government, for businesses, for homeowners with mortgages.
So how did Australia respond internally? Well, the report suggests the RBA, the central bank, maybe waited too long to hike rates, then had to slam on the brakes really hard. And that, combined with political gridlock, may be a focus on short-term votes over long-term planning. It left the country struggling to respond effectively.
Yeah, this analysis really underlines how incredibly hard it is to navigate both those strong domestic pressures and unpredictable global forces at the same time. It's a stark reminder that the timing, the responsiveness of policy, it's just absolutely critical when you're facing this kind of convergence of crises.
So let's ground this in the numbers, the projections for 2025. GDP growth, stagnant, like 0.5% year on year. Unemployment potentially rising to 5.7%. Inflation still high, 4.8%, well above their target. That household debt-to-income ratio, still over 190%. and housing affordability. Worse since the 1990s, with wages definitely not keeping up with inflation.
Yeah, those numbers together paint a very clear and frankly quite troubling picture of an economy under serious stress. The report's short-term warnings are pretty stark, too. A high chance of mortgage defaults and bank instability without intervention, and the very real risk of technical recession.
So, does the report offer solutions? What does it recommend?
Well, it talks about accelerating housing supply, maybe using modular and public housing, actively diversifying exports away from China, looking towards India, ASEAN countries, the EU, launching sovereign investment in key areas like manufacturing, AI, renewables, reforming the tax code to actually discourage housing speculation, and rethinking immigration policy to line up better with housing and skills needs. These are definitely concrete steps, actionable ideas, but the report's final point, its real emphasis, is on the need for bold and targeted reform. It stresses that just tinkering around the edges, small changes, probably won't be enough to change course here.
Wow. What an really eye-opening deep dive into where Australia finds itself economically. It seems profoundly clear from this report that Australia isn't just facing one issue. It's more like a perfect storm, built up structural weaknesses, big global shifts, and decades of what the analysis calls policy complacency.
Absolutely. The conclusion here is quite sobering. It suggests that without that kind of bold, targeted reform, the country really does risk becoming, and I quote, a cautionary tale of a developed economy that over-leveraged itself into stagnation.
So as you, our listeners, reflect on this, what warnings, maybe what lessons, could other developed economies draw from Australia's experience? Perhaps even your own country? How might nations proactively spot and tackle their own vulnerabilities before they combine into their own perfect storm?
It's definitely a powerful reminder, isn't it? That even economies that seem strong, that have long-standing strengths, well, they can face huge challenges if those underlying issues aren't addressed. It really makes us question the long-term sustainability of growth models that get too hooked on certain assets or specific dependencies.
Thank you for joining us on this deep dive. Until next time, keep digging for those insights and stay curious.